Welcome to this Premier Training revision video that takes a look at Pearls, a useful tool to help with double entry. Double entry bookkeeping is an accounting system whereby every transaction a business makes is recorded in at least two accounts in the general ledger. This means that for every entry made on the debit side of the ledger, an equivalent entry will be made on the credit side, hence the term double entry. However, when learning double entry for the first time, it can be quite confusing for a while, remembering just what goes where. And this is entirely natural. And if you're looking for someone to blame, you could blame this man here. His name is Luca Pacioli, and he's probably the most famous accountant who ever lived, and considered to be the father of double entry bookkeeping. But he didn't actually invent it, and the double entry system had been in use long before he was even born. However, in 1494, he was the first person to write it all down in a book. The Summa de Arithmetica, Geometria, Proportioni e Proporzionalità. And included in here were 27 pages laying out the fundamentals of double entry bookkeeping, and it's considered to be the most influential work in the history of capitalism. So, a good understanding of double entry is essential for bookkeeping, and thankfully there have been several tools created in the intervening 500 years since Luca Pacioli wrote his book to help remind you which side of the general ledger each entry goes. And one of these useful reminders is Pearls. To see how this helps, the first thing we need to do is pop this word into a T account, splitting it straight down the middle, putting the first three letters P, E and A into the debit side, and the last three letters R, L and S into the credit side. So first, let's look at how this helps us remember the entries that will be made on the debit side of a general ledger account. The first letter P stands for purchases, and these will be the inventory items purchased by a business, and might include the raw materials needed to make products, or any completed goods bought for resale. The second letter of Pearls is E, and E stands for expenses. An expense is any money spent or cost incurred by a business in the pursuit of trade, and includes things like any rent that has been paid, wages or salaries, discounts allowed, gas, electricity, or any other overheads in general. You get the picture. The third and last letter on the debit side is A, and A stands for assets. An asset is any resource owned by a business, and might include vehicles, computers, any money or cash held, and also includes any money owed to a business by its debtors, such as a business's trade receivables in the receivables ledger control account. Now, let's look at the entries made on the credit side of a general ledger account. The first letter on the credit side is R, and R stands for revenues, and this will include any additional revenue a business receives from its activities, and might include items such as rental income, commission received, and will also include any discounts a business receives from its suppliers. Next on the credit side is L, and L stands for liabilities, such as any loans or bank overdrafts, and will also include any money owed by a business to its creditors, such as its trade payables in the payables ledger control account. Finally on the credit side is the letter S, and S stands for sales, and this is quite simply the income a business receives from selling its goods or services. You may come across other tools to help you remember double entry, but Pearls is generally the most commonly used. And no matter what type of account you're using or what level you're studying, the basic principles here will always apply. I hope you found this video helpful, and thanks for watching.